NVIDIA. You got this back and forth on, is it about America winning the AI arms race or is it China between these comments that Jensen Huang said? What's your take here?
Yeah, FT reporting this, that Jensen Huang came out basically and said, he told the Financial Times on Wednesday that China's going to win the AI race. Now, he did come out with a softer statement on X, on NVIDIA's, handle there. But this is the concern that I have. And I think a lot of people are stating this, that Jensen Huang says that they should be able to sell their chips to anybody. While the U.S. government and even China government says, hey, we don't want this in our, in our country at this point. We want to build up our own AI, but they need these high-end AI chips. He's kind of playing both sides here, Diane, if you think about it, because he wants to sell more chips to everybody, but at the same time, he's doing it for the benefit of his company at this point. So, there's restrictions that the U.S. has and there's restrictions that China has as far as chip sales goes. But he's trying to play, I think, both sides of this. He said he did come out and say that China is nanoseconds behind America in AI. It's vital that America wins this by racing ahead, developing developers worldwide here to keep our lead here in the AI space. But you've got to take it with a grain of salt. He wants to sell more chips. At the same time, is China, do they have the capacity and the technology to jump over the U.S.? And I think that's a concern that he has, and maybe that, that the U.S. government should probably take into consideration here as he's, as I said, playing both sides of the game here.
That's a good point because obviously, he would want to sell chips in China as well. But what's interesting is this is certainly not rattling the stock like when you think about the DeepSeek situation earlier this year, which feels like it's so far in the rearview mirror. No one's even thinking about that anymore. All right,
China will prevail in the fight for artificial intelligence, AI, according to Jensen Huang, CEO of NVIDIA. The remarks were somewhat retracted by the corporation. The statement was not an error on his part. He might have succeeded for two reasons. China will prevail in the fight for artificial intelligence, AI, according to Jensen Huang, CEO of NVIDIA. It's bad news for more than just NVIDIA if he is right. Because they were unaware that there are two entirely distinct approaches to accumulating wealth, some investors succeed while others struggle. Learn about both here to avoid making the same mistake twice. Huang must be worried that China won't be able to purchase NVIDIA's top-tier processors from the U.S. China has responded to this by claiming it is capable of producing its own top-notch chips. Sales of NVIDIA suffer as a result. Huang may have made the statement because he thinks it is true. In any case, his remark was clear-cut. He told the Financial Times that China would prevail in the AI race. Huang might be right for a number of reasons. First, it seems that China uses chips that aren't as strong as NVIDIA's to run high-end AI software. This makes it possible for Chinese programmers to create AI software at a minimal cost. To encourage the adoption of chips produced by domestic IT companies, the government has provided financial incentives. DeepSeek said in January that it built its public-facing software for just $5.6 million. To make comparable goods, American businesses must invest tens or even hundreds of millions of dollars. A potential brain drain among elite developers due to limitations on non-citizens is another issue facing the United States. Some have been informed that they had to leave the nation. It is bad news for companies like Microsoft, Amazon, and OpenAI, even if Huang is only partially correct. Almost the past year, the price of Palantir shares has increased by almost 350%. Artificial intelligence, AI, optimized IT infrastructure is being implemented by organizations worldwide. OpenAI is striving to develop AI to surpass human intelligence. Over the past year, Palantir Technologies' stock has had an incredible run. Through the week ending October 31st, its share price had surged more than 350% over the previous 12 months. Therefore, it's significant when Palantir's billionaire investors choose to exchange the stock for something else. High acclaim has been given to the replacement. According to Angelo Zeno, senior equities analyst at CFRA Research, the corporation will be crucial to civilization over the next 5 to 10 years. NVIDIA is that business. Here are several reasons why NVIDIA is a better long-term investment than Palantir. Jim Simons' hedge firm Renaissance Technologies is one of the billionaires exchanging Palantir stock for NVIDIA. Palantir was the fund's largest holding at the end of the first quarter with almost 16 million shares, while NVIDIA was far from the top with only 0.2% of assets under management, AUM. However, by Q2, the fund had fallen to 13.5 million Palantir shares, and NVIDIA had risen from barely 1 million shares to over 7 million, making it the number 2 position at 1.6% of AUM. Palantir's extremely high valuation is a major factor in the decision to sell its stock. This is how it compares to NVIDIA's price-to-earnings (PE) ratio, which shows how much investors are ready to pay for each dollar of a company's earnings based on the trailing 12 months. The graph illustrates how Palantir's PE multiple has increased significantly over the past year, surpassing NVIDIA's by more than 10 times. This implies that the price of Palantir stock is excessive, indicating that now is a good time to sell shares. Nevertheless, given that NVIDIA's stock reached a record high of $212.19 on October 29th, and its market capitalization reached a record $5 trillion, why is it the right moment to invest in the company? The explanation is reminiscent to Zeno's statement. Even though artificial intelligence, AI, is still in its infancy, it is revolutionizing a number of industries. Tech behemoths like OpenAI, the company behind ChatGPT, have spent the previous few years training their AI models and making the program capable of fundamental tasks. These businesses are now concentrating on enhancing AI inference, or the capacity of an AI model to evaluate and make inferences from data. NVIDIA's graphics processing units, GPUs, are excellent at providing the massive processing power needed for AI inference. Businesses and governments all across the world have looked to NVIDIA as they develop their AI inference capabilities. For instance, by 2030, the British government intends to boost its computing capacity by at least 20 times. In order to achieve this, NVIDIA is providing the nation with over 100,000 GPUs. However, AI inference as it exists now is only the beginning. Artificial General Intelligence, AGI, is a level of AI that is comparable to human intellect in terms of creativity and problem-solving, according to OpenAI. According to OpenAI, AGI is more intelligent than people. Even more processing power than is now available is needed for this level of AI model. For this reason, OpenAI and NVIDIA reached a historic deal to purchase millions of GPUs. NVIDIA will probably see further sales growth in the future as OpenAI won't be the only company pursuing AGI. According to industry projections, the AI market is expected to grow from $255 billion in 2025 to an astounding $1.7 trillion by 2031. Because of its leadership in the AI semiconductor industry and its estimated 94% GPU market share, NVIDIA is well positioned to grow its business, even though its shares aren't cheap given that its PE ratio is getting close to 60. Additionally, NVIDIA is developing quantum computing. With its increased processing capability and lower energy usage, this technology appears to be the way of the future for computing. NVIDIA unveiled its NVQ-Link technology, which links quantum computers with GPU-powered supercomputers, during its GTC presentation in October. This illustrates NVIDIA's desire to maintain its position as a leader in the upcoming computing revolution. Although Palantir is a strong business with significant potential for future sales development for its AI solutions, it lacks NVIDIA's level of industry significance. Tejas Desai, a research analyst at Global X, summed up NVIDIA's crucial position by saying, "Trillions of processing chips will be up for replacement through this decade, and AI needs specialized chips to run on." The semiconductor giant is becoming the center of gravity for AI as the world moves toward AI infrastructure, something Palantir is ill-positioned to match. For the long run, NVIDIA is a better company to purchase than Palantir because of these characteristics. Once again, NVIDIA is at it. This time, it is the first company to surpass the $5 trillion market valuation mark. In the age of artificial intelligence, this company is leading the way. As its most recent chip series, Blackwell, gains traction in cloud computing, data centers, and AI inference applications, more expansion is expected. This hope extends well beyond the news reports about NVIDIA's accomplishments. Big tech clients like Microsoft, Meta, Alphabet, and Amazon are still investing more in AI. This is a significant blow to the top supplier of semiconductors worldwide. Stock buybacks, profit margins, and revenue growth all keep rising. Investors may be witnessing the start of NVIDIA's upcoming golden wave, based in Santa Clara. One of the top businesses in the world for creating and producing graphics processing units, GPUs, and other AI computing technologies is NVIDIA. The price of NVIDIA's shares has increased by 44% in the past year. The stock price is currently close to its record high of $212.19 at about $201. Its dominant position in the AI infrastructure sector is the reason for its outstanding performance. The valuation is high yet justified. NVIDIA continues to have a price-to-earnings ratio of 47.9x, a price-to-sales ratio of 37.7x, and a return-on-equity of more than 100%. With a 55.9% net margin and a 72% gross margin, these data show the company's inherent profitability, even though they appear wealthy. Additionally, NVIDIA's extremely strong balance sheet is shown in its debt-to-equity ratio of 0.008x. For the second quarter of its fiscal year 2026, NVIDIA recorded $46.7 billion in revenue. This exceeded Wall Street projections with a 56% year-over-year, YOY, and 6% sequential gain. The Blackwell GPU platform drove a sequential 17% growth in data center revenue, as the demand for AI infrastructure continued to be extraordinarily high. In contrast to 0.68 during the same quarter last year, the company's non-GAAP EPS was $1.05. With the exception of a one-time $180 million inventory advantage, the gross margin reached 72.7%, or 72.3%, demonstrating the profitability of its AI product mix. During the first half of fiscal 2026, NVIDIA also produced a sizable amount of free cash flow and gave shareholders $24.3 billion in dividends and share repurchases. The Blackwell platform is currently in full production and continues to receive exceptional demand from hyperscale and business clients, according to management. In order to bolster confidence in long-term growth, the board of directors increased the authorization for share repurchases by $60 billion. Investors will be monitoring for updates on the Blackwell Ultra ramp and the total backlog of AI infrastructure when the company releases its next earnings on November 19, 2025. With an average recommendation of strong buy, analysts are still very optimistic. The next golden wave of Gen AI adoption caused Loop Capital to raise its target price to a street high of $350. At $233.05, NVIDIA's mean target price supports growth potential of almost 14% at present pricing. Growth potential of almost 70% is suggested by comparison with the high target price. According to analysts, NVIDIA is outperforming its rivals Advanced Micro Devices and Intel because to its distinctive AI platform. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Good morning, Nicole. Yeah, we are seeing a little bit of pressure in the S&P 500, down about 0.6% as you were continuing to talk here. Technology is getting a lot more weaker, if you will. NVIDIA starting to slide. Duolingo also moving to the downside here. So we have a situation in a market that continues to gyrate around these levels. We were able to see a little bit of a recovery yesterday. We did see a little bit of a selling pressure going into the close yesterday, and that's exactly what's being followed up this morning. Now, there's a lot of headlines that are in the news. Tariff policy, kind of a curveball or a wild card there to see how it's actually going to pan out. If we do see tariffs actually taken off the table, are we going to see the equity markets actually sell that because of other aggressive actions that the White House could take in order to kind of mitigate some of that risk? And you also have this situation where we have NVIDIA earnings coming on deck. Maybe you are seeing this kind of selling pressure taking place as a lot of the news from these Mag 7 names are now being priced into the market, and volatility continues to surge. We're seeing at a 19 VIX right now, getting close to around that 1.3, 1.4% implied move here. here, and I think the market just wants that new catalyst. And I'm not sure if NVIDIA is going to be that catalyst. We may also get some news around the government shutdown here today. After the elections, we did see that on Tuesday. We are starting to see the FAA actually starting to cut some flights pretty aggressively here. Are we going to see a lot of these representatives get off the sidelines? Maybe we hear something from the Senate. Maybe that turns the market around.
Yeah, we heard that this morning. They're going to be cutting flights. Was it 10% or 40%? But it was a big number. Do you know what the number was?
It was 10% across with several different airports.
So they're going to be cutting the number of flights, and they were doing comparisons to past shutdowns, which were actually partial shutdowns. And so how grave of a story this really could become very quickly. And so they think that may push lawmakers to get this thing through.
Yeah, it's going to be a very big pressure point, especially when you come to the holiday season. I mean, that's the real big moneymaker, not only for the airline companies themselves, but a lot of small and mid-sized businesses that are really relying on that holiday spending, that holiday travel. And so this is going to impact from rural communities to urban communities. And I think a lot of these representatives are probably going to be focusing on that moving forward, especially once again, we're done with the election cycle. So they have that kind of marker already put into place. And maybe we do see some form of a resolution that we kind of delay maybe this government shutdown, at least for now, try to figure out the healthcare policies and things of that nature. But I think that's going to be a really big story here moving forward. And the tariff policies, do we see them getting removed from the Supreme Court? That could be a possibility. The White House definitely has other avenues to impose those tariffs. I'm not sure how much of an impact the market's going to have around that decision. I think this is going to be a government shutdown story here moving forward.
Look, I think we don't know how the market might react. Will there be a knee-jerk reaction, at least to the upside, or will it come up off the lows if we get that news? There might be a sense of relief with that, to have some clarity versus uncertainty. The market doesn't like uncertainty, but nobody knows how the market will react. When it comes to tech, and I do want to get to the Challenger labor numbers, because the layoffs have been huge. Layoffs surged to the 20-year highs. So while we're not getting some of the data, we've been getting some soft data from ADP and such. But just on the tech story, NVIDIA, Palantir, AMD, three big movers this week, and Qualcomm out with its numbers. I mean, just one more final thought here on tech.
Yeah, so if we're looking at Qualcomm's numbers, they came in pretty decent. At the end of the day, they did beat both top, bottom line. Guidance, for the most part of their commentary, looked a little bit healthy here. I think this is more of a buy the rumor, sell the news event. They had one business unit that did actually miss the street's expectations, but a very small one. I think it only drives about $1.9 billion compared to, a significant amount when you're looking at some of these other industries within their business line. So not that big of a mover here. Palantir, buy the rumor, sell the news type of an event. We have seen Alex Karp getting a little bit more aggressive when it comes to the media and his commentary. So I think we gotta
commentary.
Yeah, so it's getting a little bit heavy there. And then the OpenAI news yesterday, I think, has gone under the radar here, but their CFO kind of talking about the federal government providing a backstop for them in order for them to expand their data center investments and be able to create cheaper rates. I don't think that the market probably did not like that. I think that's another reason why NVIDIA kind of dropped to the downside here. But you're really kind of talking about a backstop for OpenAI in order to keep this boom going. And unfortunately, Nicole, the AI story is driving around 0.7% of GDP growth right now. This is the only thing that's really growing our economy at a sustainable rate. We can see other areas faltering here. So let's see if that actually does come to fruition. But I think that's also providing maybe some of the selling pressure within the tech space just in general because of those comments.
And Tesla Investor Day. So we'll have Tesla to keep an eye there, folks. As far as what happened with Palantir, I mean, Alex Karp saying basically he really gave his rebuttal. That's a nice way to say it, to Solomon and Pick, right, from Goldman Sachs and Morgan Stanley when they put out that cautionary tone. And he, sort of really gave his rebuttal that that's not the case. In fact, he felt quite bullish, right? That was